Okay, guys, there you have it. Welcome to the Power Mining Analysis second weekly miner review here. We've got Anthony Power back in the office. Anthony was actually out at the AIM Summit this weekend in London. So we'll start off with a quick update on that, Anthony. We've got a lot of information to go through in today's presentation. We're starting to see some monthly production updates. Bitfarms is first out of the gate as normal. We also had some high-level Q1 numbers out from Riot. IREN's been making some moves as well. And then obviously the price of Bitcoin has really taken a turn to the downside here this morning. I don't know what this Hong Kong ETF has done, Anthony, but it doesn't seem to be adding a lot of buying pressure. So we'll get into all of that, you guys. And then, of course, leave some time at the end for question and answers. So, Anthony, welcome back. How was the AIM Summit?
Yeah, good summit, actually. It's the second time I've been to the conference. I went 2 years ago. That was my first conference I attended in the sort of like the Bitcoin mining space. And the good thing about the AIM Summit, they have one in London in April, one in Dubai in October. And these are well attended by the mining companies. So this one I've just attended in London, I got to see, 9 or 10 of the miners that were there, and had, some really quality time with the likes of Ben Gagnon, with Adam Sullivan, with Jason Les, with Fred Thiel, with Zach Bradford from CleanSpark, Bit Digital were there, Aidan and Frank Holmes from Hive Digital. So really good. So I didn't get to speak to Sue, but I saw Sue Ennis there from Hut8. But it's a big conference. It's the first day is all the macroeconomic update. So it talks about the geopolitical issues around the world at the moment. So the war in Ukraine, the war in Gaza. Also the fact that we've got elections happening at the end of this year, and discussing about who thinks Biden's going to be re-elected, or will Trump get back into the Oval Office, and the implications of what would happen in those scenarios. A lot of great investment speakers, but that's day one. Day two is more or less miner day. And bear in mind, of the sort of like the 20, 25 companies that sponsor the event, all the mining companies were prominently sponsoring the event. So, it's their day to showcase what they do. And there was a number of panels with the mining. I think 9 of the 10 miners were represented on the panels. So there's about 3 or 4 panels. And Frank Holmes from Hive, he gave a 10-minute presentation on Hive Digital. And Fred Thiel gave an equal 10-minute presentation on Marathon Digital and what they're looking at the moment, outside of the normal Bitcoin mining, actually, in Fred's case. And then we had some panels about, shareholder evaluation, in the Bitcoin mining space. And so, really strong panels with some of the, the big CEOs and the big chief mining officers of these companies. So, yeah, a good day. As I say, my voice was starting to go yesterday because, having a really good catch up with quite a few of them. So, I thoroughly enjoyed it.
Well, hopefully we can keep your voice and your internet connection long enough to get through the hour here today, Anthony. Yeah, really interesting. I'm looking forward to going to Bitcoin Nashville. That's going to be my first Bitcoin conference. It'll be really interesting to see all these people we talk to and about and meet with in person, Anthony. Looking forward to it. So I'm glad that there was such a great representation from the Bitcoin mining community. And it's nice to rub shoulders with all those financial giants and investment gurus as well.
And just as an add-on, Power Mining Analysis got at least 3 or 4 shout-outs from the panel. So people are obviously appreciating the work that we've been doing here. So that was equally good to hear. The checks are obviously in the post for those comments, but it was great to hear them when you sat in the audience and people are pointing you out and saying, if you want to know more about the mining space, Power Mining Analysis is the place to be. So that was really helpful as well.
There you go. Well, hopefully you got their address. We can send them some hats and T-shirts with a couple bills stuffed in there, Anthony. Now, I see we're over 50 viewers now, you guys. That's great. This is our second weekly podcast, Wednesday mornings here. Make sure you hit the like button. We're really trying to push this out, broadcast this on a weekly basis to anyone interested in the mining space. Now, with that being said, we're going to get into a couple hot news items here before we start the Q&A session. So first things first, you guys, we've got 8 different slides here we're going to go through. Very timely and relevant content here. We're going to get into Riot, Bitfarms, IREN. But before we do, Bitcoin price itself, Anthony, we had the ETF in Hong Kong starting to trade on April 30th. We've had the ETF in the States, obviously, for quite some time now. Bitcoin was really looking strong going into the halving. We were hitting all-time highs. Hash price hit $183 post-halving. And since then, it has all unraveled, Anthony, in the span of a few short days. I was looking at my account. I think I'm down $30,000 or $35,000 in the last 4 trading sessions. It never gets easier to stomach the volatility. What do you make of the price breakdown here? Do you think it's all over? Do you think we're going to zero, Anthony?
I don't think we're going to zero. And again, we know that Bitcoin is very, secular, and these cycles, every 4 years. In the previous cycles post the halving, the Bitcoin price has dropped before it's then started to gather momentum, and quite a few of these technical people are saying this is, from their position, this is great because it's following where they expect it to be. We said in the last few podcasts, that there was great news for the miners post the halving, and transaction fees really helped get some of these miners the revenues that they needed. And actually, I would say most of the miners were getting more revenues on those 2 or 3 days post the halving than they were before the halving. So it really helped them. But we're seeing those revenues come right down now. We'll discuss that sort of that hash price in a second. The Hong Kong ETFs, 6 ETFs went live on April 30th, but I don't believe the level of Bitcoin bought represented what the expectation was. And I think maybe some of the price was built into that opening, and there'd be a real inflow. So the challenge now is, I think there may have been an expectation that, a lot of Chinese money would go into those ETFs. But from what I was speaking to people at the conference, maybe nowhere near that. And maybe we'll have to wait a while. I mean, we do know that Asia is very, very supportive of Bitcoin, because we can always see when the Asian markets are open, the Bitcoin price tends to do quite well. And then when it comes across to the US markets open, we sort of see a little bit of a dip at the start of the open. So, but I'll be honest, I was probably expecting more. But if the price was already built in, and we know that the numbers from Asia weren't great on the 30th, hopefully that they pick up. I mean, there's a lot of conditions in China that you can't do things, and gambling is one of those things in China. So, they can't gamble there. So the Chinese look at an alternative way to do that. They go to a place called Macau, which is just literally about half an hour boat ride from Hong Kong. And if you think about Las Vegas, as being the capital of gambling, Macau does about 5 times more in gambling revenues than Las Vegas. So I think some people are thinking the implications are this could be really, really big. And, time will tell. We're only into sort of like day 2, really.
And 2 things there, Anthony. The Asian culture is huge on gold, right? We all know their affinity with gold, the precious metal sector. So I do think Bitcoin as a hard money gold alternative replacement, there is some correlation there. And then the other thing I wanted to mention with the halving, that's 450 Bitcoin per day that are no longer available. If you multiply that out by $60,000, that's $27 million essentially of either buying pressure or reduced supply every day. So that's definitely going to help. But I read a nice analogy. It's like when you start going to the gym, you may take your protein and workout and everything, but it doesn't all happen in day one. You don't get skinny on day one. You've got to let this work through the system. And I think that's what we're going to start to see. So the next one, Anthony, I've got for you, our good friends over at cryptocurrency.com. They've put out this article saying Bitcoin dropped all the way to 57,000 and is now in a bear market. 10% drop in the cryptocurrency. For you and I, guys who've been around the block a few times, a 10% drop is nothing, Anthony. This is something we can have before tea and coffee this morning. But for people who are new to the space, especially the ETF group who've maybe bought in through a proxy, they may not be familiar with the underlying volatility of Bitcoin. I don't necessarily think we're headed for a bear market here, but 10% to me, Anthony, feels like nothing. How about you?
Yeah, I mean, if you went through the 2021 and 2022 years, you would have seen 10% happen on quite a few days during that period there. So, if you've been through those, you've got a little bit more experience. I mean, go back to January the 1st, it was 42,000, so we're still 15,000 higher than at the start of the year. So, yes, we got to 73,000, and I think it's about managing expectation. But again, we just reiterated, a few minutes ago, if you led to believe what some of these technical and analysts are looking at, they expected a drop post the halving, and then it's sort of like, the price will start playing catch up and get to where it needs to be for the next level. So I think I'm not looking to sort of like sell any of my Bitcoin at the moment. I'm not sold any mining stocks for quite a while. So I'm just this space is, it's not for the faint-hearted. It's, there is volatility, and 10% in the last week, which is about right. I've just looked at the last 5 days. It's 9% over the last 5 days, so probably 10% over the week is an accurate position. These mining stocks can change, 20, 30% in a day, and so again, it's not for the faint-hearted. But the reciprocal of that is why people are in the space, because they look to try and buy when it's good value to buy. Hopefully that the Bitcoin price rallies, and then the mining stocks follow suit, because there's always been that correlation between the mining stocks and the Bitcoin price.
Yeah, interesting stuff. I think we've obviously seen this before. We'll see it again. Hopefully, these big fluctuations, volatility, start to normalize, get less, aggressive as we get more liquidity in the market, more entrants, and ultimately more market cap. So moving along, Anthony, we're over 100 people now, getting close to the live Q&A section. We've got a few news articles to go through. We're going to talk Riot, IREN, and Bitfarms. But before we do, our good old hash rate index here, Anthony. Bitcoin, at the time this was taken, $57,500. An arrow through the heart, Anthony, and hash price has continued to fall off here. What are you seeing in this chart? Any of these numbers stand out? What should viewers be looking at here today in terms of the hash rate index?
So prior to the halving, that's sort of like 10 days before that, we looked at the average hash price that miners were achieving those 10 days. It was between $100 and $110 per petahash per day. Post the halving, that reached a high of $183, literally 24 hours after the halving. And we were doing a podcast at the time as it was starting to spike. But then after a few days, those transaction fees have come right down. And they were still, up until a few days ago, they were still a little bit higher than expected. So look at transaction fees prior to the halving. They represented about 5% of the Bitcoin reward. Now they're representing about 10% of the Bitcoin reward, where they were the last time I looked. I mean, it has dropped. I looked yesterday when it was like $50 per petahash per day. Now it's down to 45. And I did ask a miner, at what point would miners start to switch off? And he indicated that, his company, I won't put him out there, but he said that he was a CEO of a mining company. You have to get down to $29 per petahash per day for it not to be viable for them. So there's still a bit of a way to go. Now, we know that the global hash rate was still significantly high at the halving, post the halving. In fact, the first difficulty post the halving was an increase. It increased by 2%. Now, go back to January, and you had the big investment banks like the JP Morgans and the Cantor Fitzgeralds were saying, you'll see the difficulty change because there'll be this 20-25% coming off the hash rate. And if you bring that amount of hash rate off, you automatically, the miners that are on the hash rate at the time then will take longer to actually mine a block. So when the difficulty occurs, the difficulty enables the blocks to go back to 10. So if you have like less machines looking for that number, it means it's harder to find that number. So 10 minutes is a normal block, and all through the last 18 months, as we've seen this Bitcoin price rise, every month the blocks were being done quicker than sort of like 10 minutes, and therefore every difficulty, every 2-week period where the difficulty is adjusted, it was going up. And even the sort of like we asked people on the podcast when they were coming on, CEOs and chief mining officers and directors, what they felt about, what happened post-halving. And they said that, less efficient miners would come off. Yeah. And the Bitcoin price at sort of like, when it was like 70,000, it wasn't sort of like, people still making profits, even using really less efficient machines. I think at this rate now, I think this will have an impact on the less efficient miners. So we will start to see some switch off. I did have a quick look yesterday, and the difficulty looks like it's going to drop from when it's due in about 8 days time. So and it's we're 8 days out, so things can change. But at the moment, if this price stays at 56, 57,000 or drops further, you can guarantee that miners will start coming off, and that difficulty will be reduced. And what that means then is the miners that are still on the network, who are still able to sort of like mine at these levels, have a greater share of the network, and therefore a greater share of the rewards.
And that's why, Anthony, just to add there, you guys, that's why the balance sheet strength is so important, because this stuff can take time, weeks, months to normalize. And if they're mining at a loss for a couple weeks or months, like you always say, Anthony, they have to still pay the employees, the energy prices. So they need that cash runway, hey?
That's correct.
Yeah. No, it's very interesting. And now as we move into some of these miner updates, Anthony, we're going to take a look at Riot and their position, their cash balance in a second here. But before we do, you guys, I know Riot and Bitfarms are obviously highly anticipated. Our good friends over at IREN, they've been quietly working away this year as well. Hey, Anthony, they're up to 9 exahash. They're well on their way to 10. Their facility, we just got an image here of the Childress construction update in April. Things are coming along for IREN slowly but surely, eh?
Yeah, it's again, obviously since the issue they had with NYDIG back in late 2022, when they defaulted on the loan, and they were like, if you go back to January 2023, they had a hash rate of about 1.3 exahash. And yes, they had some cash in the bank where they were able to buy some mining machines to get them, to back where they need to be. But at that point in time, having handed the machines back to NYDIG, they had zero debt. And what you've seen since then is you've seen really them being very actively growing as a company. And this Childress site, we can see the picture there on the screen. It's looking really impressive. They look like I've not been to those facilities myself, but they look pretty impressive from the photographs. They're not like containers like you see on some sites. So and Dan Roberts has been on the show before, and I've heard him speak many times about they do have a lot of experience in that company about building data centers. So they've got a team around them who've got experience. Some of the biggest data centers in Canada, some of the CEOs and senior managers from those companies are part of the IREN team now. So this looks like a great site. And the fact is, in May they'll get to 10 exahash. There's a plan to get to 12 by the end of June. So you can see these buildings now rapidly going up. And, they've got to get to 20 by the end of the year. Now, the benefit that IREN have over some of the other mining companies is that all their growth is on one site. So, like Riot's Corsicana site, where they've just energized there, the Childress site will get IREN to 20 exahash when they've completed the work by the end of December, and it's still got capacity to grow further than that. But there's going to be some significant work in getting these buildings up, and we know that once you've got the power in place, and you can see that in the top right-hand corner of the picture there, you've got all the power and the transformers and subsidiary there. The building of these buildings, they can bring as many workers on site to get those done in the time frame, because it's just a case then of carrying out. And we know that looking at the likes of Helios, which Argo Blockchain built in about 7 months during 2022, they built a 200 megawatt facility, which is capable of about 6 or 7 exahash, in 7 months. So there's no reason why the Childress site with another 8 months left can get to their 20 exahash. They haven't got to do it in loads of locations, all in one location. They can ramp up the number of staff to get that completed and meet that target by the end of the year.
And we're actually getting quite a few questions in the comments, Anthony, about some of these targets, the 50 exahash goals of some of the big tier 1 miners. So we're going to get to that right away here, you guys. But before we do, quick reminder, hit the like button. We're at 120 people. We want to get this up over 150 before Q&A. And next up, we've got Riot. So we do have earnings out, or I guess high-level Q1 numbers out from Riot. This is a nice image of their Corsicana facility. Just can see the scale here, Anthony. Absolutely massive facility. We're going to be heading down there in about 45 days' time, get some boots on the ground. We're going to go kick the tires on this place, see if we can find any issues, Anthony. But really impressive, all honesty here, you guys. This is a world-class top mining facility. And the numbers that they put up here, definitely following suit, Anthony. So $79 million total revenue. Also, we talk about cash position. You can see $688 million of cash, 8,500 Bitcoin on the balance sheet. Walk us through what you thought from Riot here, at least for your preliminary thoughts on these numbers.
Yeah, I mean, let's be very clear. We've not seen all the numbers yet, so we're getting some of these high-level numbers. So, you know, a couple of key points. You know, yes, 79 million revenue in the first 3 months. They've got sort of 3 business models there. They've got the self-mining, the hosting, and the engineering. So it's not just self-mining that contributes to that 79 million service as well. I do believe that the hosting element of Riot's Rockdale facilities now ceased, so that won't happen anymore now. So you know, it's be literally self-mining in their engineering division. So that will be a benefit for Riot, because that was really probably a drag on expenditure with that service there. The other good point is obviously with the energization of Corsicana, their hash rate should start to improve. I mean, you know, with that revenue there, you know, for part of that revenue would be self-mining. As a miner that's, you know, had over 12 exahash in place for the best part of a year, it's never operated anywhere near that. And even if you take away the fact that they've been curtailing and getting the power credits, it's only just recently come to light in the last couple of months that they've had significant difficulty with some of the machines that were only operating at 65 or 70%. And so therefore they weren't being able to utilize them anywhere near where they should be. So, you know, Riot have addressed that. They've bought a batch of machines, a significant batch of machines, you know, over 30,000 machines that will go into Rockdale, to replace the mining machines that are not operating effectively, and secondly, to increase the hash rate of Rockdale from the hash rate quoted there on the screen of 12.4 up to about 15.1. Alongside that, you've got Corsicana that's already energized, and the plan is to get, you know, that to about 16.5 exahash by the end of the year, taking the total to close to 32 exahash by the end of 2024. So that again is, you know, we've just talked about IREN, you know, having the challenge to get to 20. You've got a company here that's effectively got to grow over 20 exahash in the next 8 months, because they're only operating at 8.4 at the moment. Or they were at the end of March when we had the last update. And Jason, that was the first time that Riot have actually articulated their operational hash rate. And it sort of basically backed up what he said in the podcast that we had when Jason came on the show during March, to say that they did have some issues, because it was coming up in their in the financials, the fact that, you know, the numbers just weren't stacking up from a company with a significant hash rate. Another thing to remember is that cash balance is significant, but then they have literally sold you know, close to $500 million of shares in the first quarter of 2024. So they had a 750 million ATM, and they've utilized about 500 million of that already. And in their latest one of the latest updates, one of the SEC updates, they're looking to increase the number of shares in the company from currently about 340 million to 680 million, which then gives them the opportunity to go out and basically get all their costs covered all the way up to the 100 exahash, which is the plan to go once that happens, which will be post 2027. So they're thinking long term. They're thinking, I think it's 30, nearly 32 this year, and I think it's 50 next year, and they've got a staged growth plan there. But yeah, by just past 2027, they could be at 100 exahash. They've also benefited from the FASB rules, so we know that they had a significant gain. I think it's in the region of about 235 million in terms of the gain in valuation by having Bitcoin on the actual on the balance sheet. So, the rules now say if the Bitcoin price increases, you can take the benefit of the increase in valuation, whereas before all you were allowed to book on the balance sheet and the income statement was the actual any reduction in the price of Bitcoin. And we know that from the end of 2021 all the way through to the end of 2022, when the Bitcoin value was 15,500, miners were not able to take any benefit through 2023 for that increase in price where it grew by 155%. However, in these quarterly figures now, you can see that all the mining companies that have got a hodl are going to significantly benefit. So I don't want to comment too much about the results today. We've got Jason coming on the podcast on the 7th of May. Once the 10Q goes out, we'll do some analysis of the 10Q and maybe then highlight some areas, look at their cost to mine a Bitcoin by looking through the numbers, looking at the cash cost to mine a Bitcoin, and see if they match what they put in the presentation there, and then do some comparison with some of their peer miners to make sure that they're still performing as they were. Because in 2023, from a self-mine perspective, they did perform quite well. So let's see what Q1 looks like when we get the full report out.
That sounds like a plan. You mentioned Jason's coming on the 7th. You guys, quick update on Q1 interviews. We've got Griffin on May 6th, Riot May 7th, DMG May 8th, Cores May 9th, Bitfarms the 13th, Hut on the 15th, along with Bitdeer, 2 in one day, Soluna on the 16th, Wolf on the 17th, and Bit Digital on the 21st. So almost every single day here in May, you guys, we're going to be bringing you an interview with the CEOs of these miners you're invested in and giving you the opportunity to ask questions. So you can send us a question for any one of these companies, you guys. We will make sure we get it included as long as it's professional, respectful, and we'd love to have that inclusion. Now, we'll send this schedule out a week in advance through the community section, but make sure you note these down and get your questions in if you have investments in these companies. So moving along, Anthony, and I should state, you guys, you can listen to that on our podcast platform as well now on Spotify, Amazon, Apple Music, all the rest. Right up there, Anthony, we were right between, I think, Taylor Swift and Luke Combs. I think they had us nested in there, maybe second or third in popularity. Bitfarms, Anthony, first of the month. They are always out with their production stats and metrics first, no matter what the day falls on. Excellent work, Bitfarms. I always love looking forward to that. I've also included, Anthony, on the left, some year-end targets. We had a lot of questions about the Paraguay exposure and that potential ban. It sounds like that'll be avoided. 6-month ban on Bitcoin mining, mostly geared towards illegal mining. But we had a lot of questions about what kind of exposure does Bitfarms have to Paraguay. By the end of the year, about 42% of their business will be operating there. So fairly large exposure. And then we also had some questions about fleet efficiency. So we wanted to provide an update there. Now, speaking of April production, Anthony, 269 Bitcoin. We're continuing to see the fleet efficiency improve, increasing their new equipment on the ground. And then they also got a refund VAT taxes of about $24 million US, which never hurts. What did you make of this update?
Great. And just before I go into Bitfarms, I had quite a lengthy discussion with Jeff Morphy, who's the current CEO at the moment. We know that Bitfarms are looking for a new CEO, but while they're looking for a new CEO, Jeff is remaining in post there. And I highlighted to him that for the last 2 years or 3 years I've been in the space, Bitfarms have managed to get their reports out on the first working day of the month. head of every miner, and said, how do they manage it? And he came back and said, hey, it's very simple. We know what we earn every day. And on the 29th of the month, we know how much we've got as a total. So we can do our report and just wait till the 30th and add the final day production to that report. So the report can always go out on the day. You don't have to start a report after the month and start putting everything together. You can do it during the month. All these updates about efficiency and where they put machines into locations and growing their sites in Paraguay, Argentina, that can be done throughout the month. You know that every day you've got a new total of Bitcoin. You only have to wait till the last day, the 30th or the 31st, depending on what month you're in, to add that last day to the report and get it published on the first day of the following month. And Bitfarms have an art of this. At 7 a.m. Eastern time, that report is released every month.
Look at that proactive attitude, eh? That's the military backing in them. That's getting us down to routine. That's excellent, and it makes sense, right?
Yeah, so they're operating at they've got a total hash rate of 7 exahash, but their average operating hash rate for the month was about 6.1. So again, that's probably a 10, nearly 15% lower than expected hash rate. 269 Bitcoin at the average price, was probably bringing in over $500,000 of revenue per day. So that's great for them. When they get the refund for the VAT, that's another cash input there. We know that they've got, a strong balance sheet now, zero debt. They've got cash in the treasury. They've got about 830 Bitcoin now. So they grew the Bitcoin by about 22. They've been utilizing some of the Bitcoin each month for their operating costs, unlike some of the other miners who are like going, all in on the hodl at the moment. So 3 or 4 miners just literally not spending any of their production and trying to grow that hodl. And it's great when the Bitcoin price goes up. But if you think about, when it got to 73,000 and now we're at 57,000, all these miners who sell daily, and actually, although I didn't get to speak to him yesterday, Paul Prager did walk past me at the conference, having just been been watching and asking questions on one of the panels that was on the stage there, where one of his directors, Kerry Langlays, was actually one of the panel discussing TeraWulf. And so he would come on here and advocate that he's made a great deal out of selling the Bitcoin all the way through the rise to 73 and all the way back down there. So, we're always looking for those strong advocates of either strategy. We don't have a preference of strategies. As long as you've got a plan of how you utilize your strategy, I think they can be equally articulated, really well.
Agreed. Yeah, I was thinking about that actually as Bitcoin was dropping, if Paul was laughing at us in his sleep, Anthony, or not. But you're exactly right. And obviously, Anthony and I are big Bitcoin maxis. You guys, we believe in Bitcoin long term. But short term, we have absolutely no idea. And there is a chance that Bitcoin won't work out how we all think it will. So kudos to Paul. And like you say, it doesn't matter what the strategy is, as long as you stick to it and you execute on it. Right, Anthony?
Absolutely.
Great. So anything else for Bitfarms, Anthony, before we get into some questions here?
So just to round off, they've got a strategy to get to 21. So again, another miner that's got and if we were discussing CleanSpark as well today, that's the 4th mine that I've got. These 4 miners, so IREN, Bitfarms, Riot, and CleanSpark, have significantly growth strategies for 2024. And the challenge is now is who out of those 4 is going to achieve their strategy. If you go back over the last 3 years, not many miners have actually ever achieved the growth strategy. It's only happened a couple of times, and we've got well over probably 30 public listed miners out there. So it is a challenge, and as soon as one miner puts down a strong growth strategy, you feel obliged to try and get yourself in there. One thing I'll say about the miners in this group, though, it looks like they've already made the payments for the actual mining machines. So the issue won't be mining machines. The issue will be infrastructure, whether they can get the infrastructure up in the time frame. And bear in mind, we are now, as we're in May, but less than 8 months away from the end of the year. So, I think some miners might have the edge in that. You've got the likes of Riot and IREN who've got their own sites, big sites where they can concentrate a lot of workers in that site to get the job done at the time required. We know that CleanSpark are looking through a number of options for infrastructure to get theirs. They've bought the miners, so there's no issue with mining machines. It's just a case of choosing the right locations, and they've already discounted the fact that Texas isn't going to be one of those locations at the moment. And then Bitfarms, you've already articulated the fact that 42% of their growth is coming from Paraguay. And it was interesting, there was quite a few people at the conference talking about Paraguay and actually looking to do deals in Paraguay as intermediaries with the local authorities there, and looking to get bring miners in there. So it doesn't seem like Paraguay is going to be stopping anytime soon from a Bitcoin mining, but as long as it's all legal and the contracts are in place like Bitfarms have, I don't think it's an issue for those type of companies.
Yeah, most certainly. My only question there, Anthony, is how do they catch the illegal miners, right? That's by nature, if they're illegal, they don't know who they are or what they're doing or have them register. So that's my only concern there. But we can talk about that as we get into Q&A here. I've seen a couple questions about Bitfarms come up. Now, quick outlook at the market here, you guys, before we get into the Q&A. This was taken just before we started the podcast. At that point in time, we had Core Scientific up 1%. I just saw a comment about that as well. And Griffin was actually having a pretty strong day, up about 8%. Other than that, pretty dismal for the miners across the board, you guys. You can see a lot of them trading close to that low end of their daily range, their 52-week range, and obviously their daily range today. So let's get into some questions here, Anthony. Obviously, all is not down and out, but the Hong Kong ETF hasn't started to kick into high gear yet, I suppose. We've got 145 people here, you guys. Hit the like button. It's 100% free to do. It helps us get this content to other people. And with that being said, we're going to start up the Q&A right now, Anthony. So I'll get this on the screen. First question we had, actually, you were just talking about CleanSpark. We don't do price targets on the channel, but WS was just saying, I wish I would have sold my CleanSpark in the $21, $20 range. What are your thoughts on CleanSpark right now, Anthony? Obviously, share price has pulled back, very similar to a lot of the other miners we cover. But CleanSpark still seems to be a strong player and still rivaling Marathon for market cap and daily production.
Yeah, I mean, CleanSpark has had a massive move since October last year. The market capitalization October was about 600 million, and if we look at the market capitalization today as we speak now, with the Bitcoin price just over 57,000, it's still over 3.5 million. So that's like a 6x from where it was in October. If we look at the year-to-date price increase for CleanSpark, it's up 43% year-to-date. The Bitcoin price is up 35% year-to-date. There's no other miner that is in positive territory since the start of the year. And if you look at the average for the sort of like the remaining big miners that we cover in our analysis, the average share price for those miners we're down 25% year to date. So CleanSpark absolutely bucking the trend. Now the question 21. I mean, it was on the 27th of March. It was $23. So, we can all remember that day quite clearly. It was $23. It got to a high there. Bear in mind, I think it was November or December 2022, this share price was around about $1.16, $1.17. So those people who jumped in then, and the difficulty is when you see Bitcoin price and share prices drop to a level that you think it's over, who takes the risk of going in big at that point in time, thinking this is going to turn around? I mean, we saw 2022, the Bitcoin price just continually every month of that year dropped till it got to like 15,500. And it'd been 69,000 12 months before that. So, we talk about being in this space. It's a challenge. Those are the challenges that you've got to go through. Now, I'm not for 1 minute saying we don't give any price predictions on Bitcoin. We don't give any price prediction on the miners. But what we can look at is CleanSpark is, in this last couple of years has managed to grow from 2 exahash to 17 exahash. I don't think any other miner's done that big in that short space of time. And they've got a target to literally double where they are now, 32 by the end of the year. And, if you listen to the podcasts and listen to the updates that they've got, they feel quite pleased or quite positive that they're going to get there. They've got something like 20 options on the table that they're going through to look at potential sites for these new mines to go in. So, I see, if CleanSpark don't make it, nobody's going to make it. That's the way I look at it.
Well, and Anthony, you bring up an interesting point about all these deal flows they look at and all these sites. We're starting to see a lot of discussion now about the demand for AI and the increasing demand for these HPC data centers. I've seen excess of 15% compound annual growth out till 2030. So I think that's really going to start to be priced into some of these miners at some point here as well. This was for a long time a Bitcoin proxy trade. Now these are becoming energy infrastructure data center plays that have a lot else going for them besides Bitcoin. Vinny K here says, in hindsight, I should have sold my CleanSpark 3 times. Anthony, you and I always talk about this as well. We look back and say, why didn't we peel off 10% of our stack and day trade it or swing trade it? It's just not our style, you guys. Hindsight is 2020, but it's almost impossible to know in real time. The best predictor I have of when to buy and sell, Anthony, is how many times in a day I'm looking at my account. In days where I don't want to log in and look, those are days I should be buying. Days that I'm showing it to my friends, family, wife, telling everyone how smart I am, those are days I should be selling. But like I say, doing it and saying it are two different things. Now, we've got some questions. We just talked about Bitfarms in the intro and their April production. We've got some questions around Wolf as well, Anthony. This is one that a lot of people have been looking at. A lot of people have been saying have been held back. They've got a very interesting power strategy. Paul Prager's got a long history with energy and energy systems, obviously access to that nuclear power. What do you think of TeraWulf right now? How are they positioned?
The positives to TeraWulf is that they've got really low power cost. And that's really important. When the hash price is, 45 cents, you want to make sure your energy price is significantly low as well. And they've got one of the lowest energy prices. So that's something they can do there. The other positive about TeraWulf that no other miner has is the amount of insider holdings that company have. And it's in excess of 40%. And we've seen over the last year, when we look at, who on the boards are buying shares in the company. I'm not about stock compensation. That's not buying shares. That's being given shares as part of your salary compensation. Paul Prager regularly buys shares in TeraWulf because he believes wholeheartedly in the company and everything that they do, that they are one of the best mining companies out there. People are going to criticize the amount of debt they've got, which I think is about 75 million. They do have quite a significant cash balance. So if you look at the net position, it's a lot more different from 75 million. They did have well over 100 million before Christmas, and they've addressed that size. And we've seen Patrick Fleury come on Spaces and answer questions about going forward there, and he articulated it better than most people I've seen about how a company can sort of get through these times, and they have a proper plan in place to deliver. And I think there's that they've got a plan to get rid of that debt by the end of the year. So we're looking at about another 8 months from now. And without going into too much detail, some of the debt might be owned by some of the owners as well. So it means it's not like if they they're not going to default their own debt, but there's ways and means that if that debt is held inside, there's alternatives to the debt that they could probably look at as well. So for me, it's about good operations, cheap energy, the fact that they're growing. So they're at 8 exahash at the moment. They're going to be 10 exahash by the middle of the year. So that puts them, up there alongside Bitfarms and IREN in terms of hash rate. And yes, they're not going to be 20 by the end of the year, but I think they want to be over 13 by the end of the year, and that will be a great achievement. That will have doubled the hash rate in the year, so that will be more than keeping up with the hash price. You look at each miner. Each miner has got different qualities. I'll just go back to the conference yesterday. There was 9 CEOs and senior execs of mining companies, and when they introduced themselves in these various panels, there's like 3 or 4 different panels. They were all of them were able to articulate in their introduction how good their company was compared to the other companies. And it's not just one metric. You have to look at all the metrics together, because every metric will have a different miner whose ability in that there. It might be like, you look at, from an energy perspective, there are 2 or 3 miners that come straight out. You've got TeraWulf, you've got Cypher, you've got Riot, who've shown they've got access to cheap power. And then you look at things like who's got the lowest G&A costs. And then you start looking at a company like Hive Digital, who really cost manage things really well compared to other miners, don't pay themselves excessively, keep the costs down that way. So every miner can sort of you need to look at the whole package of things before you start, saying that they're number one. If you look at production by month, Bitfarms are generally at the top there. Hive Digital, again, generally at the top of that position there as well. But again, I say to people, we say on the podcast regularly, just because they got the most Bitcoin with the machines they've got each month, that's just one metric. You've got to look deeper and look in there, and we'll look a lot more deeper over the next 3 weeks as these earnings come through, and we can start doing the tables. And when I start looking at the tables, the fact that a lot of them will benefit from the FASB rules, that will be irrelevant. That's non-cash to me. I look at the cash costs. I want to make sure the revenues that are coming in have the ability to meet the costs that are going out. So that's how a business survives. You bring £1,000 of revenue in. If you're spending more than £1,000, you've got a problem. You have to keep the costs under £1,000. And so I'll be looking at these in a bit more detail when we see the full 10Qs or the 10Ks issued, and then do some sort of comparisons. And it'll be interesting to see how they changed, or are they still on track with what happened in 2023 for some of these miners.
Yeah, it's going to be really interesting, Anthony. As you're talking through that, we focus a lot on fundamental analysis here, no technical analysis, or not a big portion of that. And it's going to be really interesting, Anthony. Now that we've had these CEOs on a few times, we're having so many. We're having 11 of them back to back here in March or May to talk about Q1. I am really starting to notice the differences in their mannerisms, their confidence, their speaking. And 2 that shone through for me were Paul Prager and Sam Tabar, both very, very passionate about their businesses. I would say both of them with a bit of a chip on their shoulder in relation to where their company stacks up in terms of market cap right now. And both of these guys made a really interesting point. Essentially, we don't need to be the biggest miner to be a very profitable company and good return for shareholders. We don't need to have hundreds of exahash. We need to run our machines and our equipment and our operations efficiently and effectively with what we have, and grow as we see fit. And I think that's really a big statement here, because we're seeing all these big exahash goals, but there's a lot of money to be made in these other areas, the Ethereum staking, the HPC, the Seal Miner launch. There's not just Bitcoin mining anymore for these companies. So speaking of that, Anthony, good question.
I just want to jump in there, Bryce. You mentioned Sam Tabar. Sam Tabar was on a panel yesterday with Jason Les, the CEO of Riot, and Fred Thiel, the CEO of Marathon Digital, 2 of the sort of like the biggest miners in North America. But I can tell you now, when Sam was speaking, the passion from his voice came through, and he certainly highlighted all the positives that he could do from what Bit Digital do, and nobody can question how they've grown their HPC business in just literally a matter of 6 months, and where it's going to be in 12 months time. And that's the difference between as we see the Bitcoin price drop today, and we've just started said it's 10% down last week there. HPC revenues haven't dropped today. HPC revenues won't be dropping. They'll be paying contract prices. So, you know, when we see the Bit Digital update this month for their Bitcoin production, there'll be a little paragraph in there to see the HPC business is doing well, and we got another 4.3 million this month from our HPC revenues. So they're certainly flying a flag there, and that revenue is expected to increase, you know, by 100%. By the end of the year. So that contract of 50 million for 3 years is going to be 100 million for, you know, over the remaining parts of the contract once they can get those extra GPUs in place in Iceland. So, you know, it's interesting. And I was watching the mannerisms of, as Sam was articulating this in a really passionate way. I was looking at both Jason and Fred to see the looks on their faces, and it was quite interesting to sort of like see. But every miner was given like the opportunity to sort of like, you know, to show what their company's doing in a certain way. And so, you know, it's really good. And they're all, let's be honest, these guys are all, they're not competing with each other. They're all friends outside of their office and all like that. And, you know, that some of them even socialize a bit together, you know, et cetera, et cetera. And, you know, you're competing against Bitcoin price. You're not competing, Riot aren't competing against Marathon or CleanSpark or IREN or Bitfarms or anyone else like that. You know, it might be a case that some go after the same sites, but it's all done in a very friendly way. There's no animosity out there, and it's really good to see them all together. And, you know, they'll come around and they'll chat. And I was able to speak to sort of at once like 4 or 5 in the same conversation. It was, you know, it's a really good experience to me.
Totally is. Yeah, I can't wait for Nashville, Anthony. Now, you guys, we got a really good question here about the leverage plays. So there's a 2-part here, Anthony. From private is the first part here. Do we still think the quality miners in this example, CleanSpark and Bitfarms, not saying those are the only ones, are going to act as leverage plays on Bitcoin going into this bull run? The consensus was anywhere from about 2 to 3 times lever on the underlying price of Bitcoin. We've definitely seen that to the downside, Anthony. If we lose some couple percent in Bitcoin, the miners seem to follow suit. But to the upside, it's really been hard to see that correlation. And then we just got a second question here, again, asking about the leverage play in the past. However, do we think that'll continue in the future? It's really hard to say. I don't even know my answer to that question at this point in time. Do you?
What people got to remember, if we go back to 2021, when these mining companies were a lot smaller and they were growing, and bear in mind, we are still really in the infancy in this sector. And this was articulated yesterday by one of the miners, saying like, you know, the oldest miner, you know, only went public in 2017. So Hive Digital, followed by Bitfarms and Hut were the 3 oldest miners. I think Riot were close that time as well, so put them into that mix as well. It's only 6 years. But go back to 2021 and look at the size of these companies then, and we saw Marathon Digital reach 8 billion during that spike in the Bitcoin price and the spike in the Marathon Digital share price. And Riot's also got very close to 8 billion as well. People are saying, you know, when, you know, that the share price, I think for both companies, you know, at its highest was about, you know, $80 a share. And when are we going to see these $80 again? And I keep reiterating, it's not about the share price going to 80 million. That's when they had a lot less shares in that period of time there. We've just mentioned in the update, Riot sold $500 million worth of shares in the first 3 months of 2024. And they're planning to sell an enormous amount, you know, literally the whole company again to get to their target, you know, later on. So, you know, people need to be, you know, manage their expectation of where the share price will go. We're not going to, I don't think we're going to see these like, you know, 5-10x's that we saw previously. I mean, go back to the end of 2020, you know, I remember buying Marathon Digital shares when they were under like $5 and I sold at 57. You know, that was you know, not going to see the likes of that again, because these companies are bigger companies now with a lot more shares, and the impact of them getting to those levels, the Bitcoin price would have to be astronomical. I mean, even said before, I think 250, 300,000 if you're going to see these shares go like, you know, 4 or 5x. it's just really trying to work out which ones are where the value plays are, and there's so many different metrics to do valuations and to understand the valuations of these companies. There's a lot of work involved in doing that. I try to sort of like go through and highlight the analysis that I do and share that where appropriate. Again, with a disclaimer, we don't give out any predictions and all that, but we'll do the start for you guys, and then we'll let you take that to another level, do some more due diligence, listen to the companies. I reiterate again, these CEOs, and I spoke to them yesterday. 3 years ago, there was only one CEO really who was doing what's happening now, and that was a guy called Peter Wald at Argo Blockchain. He was talking about Argo every week, and he was on like YouTube 2 or 3 times a month, doing interviews, doing updates, doing Q&A sessions for shareholders. I mean, it was unheard of, and the shareholders loved it. Argo Blockchain was probably, I think it was the 7th largest share in terms of volumes on the London Stock Exchange in 2021. It was massive. We've seen this year or last year, Marathon Digital, one of the biggest volumes of any stock on the Nasdaq. So
I'll pause you there, Anthony. Let's get into Marathon because we've got some questions on it. And you talk about how many metrics and the difficulty it is to value these companies. That's, I think, where the opportunity is for the retail community, right? Because Wall Street is just getting into these names and they don't have the understanding that maybe some of us do who have been around these companies for years and years. So, Anthony, you talk about some of these aggressive exahash goals. You talk about rare Mara and some of the ATM activity. We've got a comment here from Cullen saying, Mara, there's no way they're going to get to their 50 exahash. We've got another question here talking about the outlook from Ma Peter. Mara's operations, have they solved their operational issues and consistency? Why don't we talk about Marathon a little bit before we wrap up here today? And guys, hit the like button. We're over 166 viewers. Let's get those likes in before we wrap up today. Anthony, what do we think of Mara?
Biggest miner by market capitalization. They've had issues for the last couple of years now in terms of operational updates. They've had a couple of good months. May last year and December last year were standout months. And when you can name standout months for a company, you know that the rest of it's not so good. They're operating. They got plugged in close to 30 exahash, so that even if you just take simplistically, that's 10 exahash more than the nearest miner at least. So Core Scientific, the second largest miner, have got 19.3 exahash at their last update in March. And yet in the last update in March, they were producing more Bitcoin. Now, I think in April, when we see Marathon's update comes out, I think they will have just picked Core Scientific this month, maybe 40 or 50 Bitcoin. They are benefiting Marathon from, they do manage to get additional transaction fees compared to some of the other pools. And we might try and get someone on the podcast to sort of explain that. That might be an interesting educational podcast that we do. So we might reach out to some people who know a little bit more about that and come on the show and tell some of the retail investors why that's doing there. I mean, they're a mammoth of a company. I got about 25 minutes with Fred yesterday, one-to-one, and was asking him, quite a few questions. They have switched models now. They are looking at infrastructure, and they've been able to buy infrastructure at really good prices. So that's also aided the fact that they were going to go down that route. I mean, we know that the control is, once you've got the infrastructure, you control your destiny a lot more than you do with it as a hosted miner. 50 exahash, again, that came out last week as a total there, and we had it. I won't say it, but we had people on Twitter who were saying, Marathon are going to buy Bitfarms. I laughed when I heard it, and I was laughing with Ben Gagnon at the conference, because people out there are putting maths together: 21 exahash of Bitfarms, 29 for Marathon, and coming up with this 50 number. It's just no way in this world a Marathon buying another miner out there like that. The only miners that will probably, there may be some mergers. So like the USBTC Hut 8, some of these smaller miners might merge. But Marathon will go to 50. They're going to be, by the end of the year, I think they're looking to have 85% of their sites owned. So at the moment, it's about 55%. So that tells you the direction they're going to get to where they need to do. So they'll be looking at sites. They've got the probably with Riot the two largest treasury balances to do this. So they've got the money to do it. They've just got to go out there and find the sites. And CleanSpark are looking for sites. So this is where the bottleneck could appear. Riot and IREN are okay. They've got massive facilities, but the other three have got to go out and find sites. And that's where the challenge will be. So,
but Anthony, you talk in the intro about the hash price dropping now into the $45 range, the impact that's going to have on profitability for these less efficient miners, and the impact of that on the difficulty recalculation. It's a real benefit to have a big bankroll, great buying power when these distressed assets come up. Hey,
absolutely. But distressed assets will be. It could be sort of like, non-public miners who can't grow at all because non-public miners can't get capital. So the only way non-public miners can grow is by private investment. So that's getting groups of investors together to invest in that company, and they go through various stages of that. And then to get listed, it takes a lot of work and a lot of money to get listed as a mining company. And we've already articulated that with the likes of Griffin Mining. So we will see at the bottom of the mining pot, we might see some movement around there. Things like, it could be 2 or 3 of the smaller miners saying, the only way we can grow is by joining together, pooling our resources, cutting out the discretionary costs then, and looking to grow, the one bigger company. I looked at the market capitalizations, and when you get sort of like below the 600 million, there's a 350 million gap to the next miner, which at the time I looked, it was Hive Digital and Bit Digital. So those companies in that sort of like top 8, top 9 have got capital, and they're growing exponentially. And the companies in that sort of like bottom 7 or 8, that's where the challenge will be. But all it takes is, we've talked about the HPC. We've talked, Bit Digital and Hive and HUT all have HPC. Looking at their Core Scientific, $100 million HPC contract with CoreWeave. These are not small amounts of money. But I think Marathon will have similar challenges that the likes of CleanSpark and Bitfarms to get that target by the end of the year. With 8 months left.
That's the thing, right? It's so bullish when you're putting out these purchase order agreements, these options, these exahash goals. We could almost see the share prices going up just based on these announcements. But getting to these is a whole nother thing. And that's what you bring up about some of these historical performers we've seen in the past. I just bring up this midday outlook again, Anthony, just to give us a feel for where the markets are heading here. You talk about market cap listed on the right here as well. You guys, we've covered a lot in today's session. Great little news update. Anthony just got back from the AIM conference in London. We went through the Riot earnings or preliminary earnings, Bitfarms April results, and IREN's pursuit of 10 exahash. Anthony, I'll kick it back to you for any closing thoughts here today. But a great podcast. We were able to make it the full hour without any internet concerns. So I guess we're on for next Wednesday. And we appreciate your time as always, buddy.
Yeah. So, I'll reiterate, even though the hash price at the moment is $45 a petahash per day, you won't be seeing any miners that we cover switching off their machines. The difficulty is forecast to go down by about 2.5% at the moment. So it does look, if it's trending that way, it means that some miners are coming off. But 2.5% is nowhere near the 25-30% that was forecasted back in January. And I think even numbers higher than that were forecast last year when the Bitcoin price was still, around about 30,000. So with Bitcoin price at 57,000, most of these miners are still able to certainly make a contribution towards their overheads. And that's the key thing as an accountant. You want to be able to pay for your energy and have something extra towards the overheads, because overheads are within your remit. You can control overheads. You can't control some of the direct costs because you can't, you have to have the energy to mine Bitcoin. So, we'll see a lot more cost management from some of these companies if the price stays the same. If the technical people have got it right, then there's an expectation that, there will be a rebound and Bitcoin price gets to, a new all-time high. As I say, we do fundamentals, let the technical people what they do. There's a space for both in this area. I'll just keep, I tend not to focus as much on the price nowadays, having been through sort of like a whole cycle before. I think in 2021 was quite a nervous year, watching the price change, far more volatile than it's been this year. So I think, I'm more sort of like, a bit more laid back, this time, because from cycles that things happen. And as I say, a lot of people are expecting a dip after the halving. Naturally, when the rewards drop by 50%, you're going to get a dip. We've had some benefit there from the transaction fees, which means that transaction fees will have a place going forward. We know it can be done. And so the bottom line is you need these mining companies to mine Bitcoin, because if they're not doing it, then the blockchain's not being, it's not being audited constantly. That's what the miners do. They're not just searching for the number. They are constantly auditing the block, checking every transaction on the blockchain. And so those transactions are checked, every day, all day, and, to make sure everything's accurate there. Nobody loses money on the blockchain. It can always be found. It can always be traced. All these people say it's all corrupt and all that. They'll always find out where it is. It's that's what the miners do, and the miners will have to do that. So there'll always be a way. I think the way Satoshi set this up is, it's intriguing how it works. And even somebody said yesterday, nearly all the Bitcoin's been mined. So what happens then? Well, we still got 116 years left of mining.
Yeah.
So and someone said, in our lifetimes, what will happen? It won't be in our lifetime. It won't be in our children's lifetimes. That this is going on for a longer period. So
well, and that's what so many people forget, that the whole Bitcoin network. Every time these ETFs buy Bitcoin, they need the miners to validate those transactions. People can't have Bitcoin and use Bitcoin without the miners and those transaction fees. So super interesting stuff, Anthony. We'll be sure to get some more videos out this week before we get into earnings season here. We've got Q1, you guys, 11 company interviews signed up so far with the CEOs coming on to talk about Q1. So make sure you get your questions in. Thanks so much for tuning in this week. We set a record, Anthony, 165 concurrent viewers. Make sure you hit the like button, you guys. Throw us a subscribe. Throw a comment in there, and we'll see you in our next video.